Hello guys, right, it's nearly 5 o'clock in the evening and I'm looking for potential reversal trades. My first stop was the currency strength indicator, and Japanese yen, New Zealand dollar is looking fairly interesting, but not necessarily to the short side, because we're getting strength coming in on this 15-minute RSI. We are approaching the pivot, the R3. Now there is absolutely no reason price has to go up there, but absolutely, if I get my 3-candle reversal and the RSI histo alert, then I would attack it. And that's it. If it, those are my thoughts. There's nothing else in my head at all about fundamentals or anything like that. We've got another good hour and 10 minutes till the 4-hour candle closes. So potentially my thought, maybe I'm just an optimist and a glass half full type person, but instead of thinking this is half empty and on its way down, I'm thinking it's on its way up. There's no reason whatsoever for buying to fall off according to my charts. I have no idea about fundamentals. All I worry about is time of day, time of hour, time of 4-hour, what the charts are telling me, and that's my coping mechanism, if you like. That's my psychological crutch. So at the moment we can clearly see we closed below that M30 low, which potentially means we've got an M15 reversal has happened. Well, it hasn't, so that in itself tells us something interesting. There's the M15 low. That's my first level on this chart. I could fill it up with all sorts of levels starting on a monthly, weekly, daily, but that overcomplicates things for me, and it certainly will for you if you're not familiar with the way I approach the chart. So I'm just not going to do it. So in order for this to go long now, it needs to fail to break and close through this 15-minute. If it does, then we have to break and close through the 15-minute to the long side. But currently all we need is a 5-minute reversal to the long side, and we need a little bit of we need a lot of momentum in here. What I'd like to see is some sort of really quite strong push up on the 5-minute, then some sideways motion, the pullback, and then the break and close on the 5-minute as well. So as it stands now, it does look decidedly weak, but what I don't want to do is get all excited about a reversal when it's got the potential to test this level up above. So if I'm looking for the down move, I need this 30-minute to reverse through. So this wasn't about finding a trade, guys. It was just about how I analyse the charts. We'll take that descending trend line off there now, and why I would be cautious about going short here, because of what's above. So that's how I trade. That's how I use my levels. I keep an open mind and just let the levels do the work. And I personally can't think of a simpler way of doing it. If I was doing this to look for a proper trade now, I'd be over on the left hand side. Like I said earlier, I'll have done a few daily levels, weekly levels, see where we are in relation to the charts. In fact, there's no harm in doing daily levels. That's interesting. So that level there, and more importantly that level, the old support level, has been tested as resistance, and so far it's held. Then we've broken through all of these resistance levels. We only need the latest one, that one, the highest one, because that will potentially be a level for the price to reverse to in order to test. Ultimately, if this does reverse, you'd expect it to come down and test some of these old resistance levels. This is what I call the strongest resistance because it's forced price down. All of these ones are part of this up move, so that's the one that's going to be the next one after this one in terms of a pretty big target. These intermediate ones do need to be watched as well in terms of reversal to the downside there, but you know, they're big gaps, they present big targets, so you can see how the price has sort of used the stairway up. So now getting back to current, we've got that one to worry about on the down. When we come back down, resistance potentially acting as support, and the support which we'd want to see broken as well if we were going to attack that gap there, H1. Now we have quite a clear pathway of gaps in order to consider potential short trades. Remember, I'm a scalper, I only want 5 or 10 pips, so we've got the M30 level drawn in there, we've got the H1 level drawn in there. That's funny, I can't see the H1, so maybe I didn't draw it in there. That's H4, that's an old H4 level there. So that's the reversal level for H1. Low, high, high, low, higher, high. That's better. So there we have our roadmap, plus the hourly ATMA is highly likely to be tested as like the what I call the rubber band. So in this instance now, this is my roadmap for that potential trade. Didn't put the M5 level in, so I might as well fill that in as well. So M5 has been breached with a close, pullback, continuation. Now if this starts to push down below the 20 and then pulls back and everything looks right, this gap would be a lovely potential trade. 17 pips. So this area here, this slight resistance, would potentially cause a problem for price. So rather than going there, I'm always over cautious, so there's probably an 8 or 9 pip potential here. And remember, we always get the pullback, or almost always get a pullback, so you get a better discounted or better price entry, slightly higher a lot of the time. This is definitely looking quite interesting. So that's it, guys. That's my trade plan just been made there. Swing 1, swing 2, swing 3, pull back, swing 4, or that's swing 4 rather, swing 5 the continuation. Don't often talk about divergence these days. There's no obvious divergence at the moment, no. So again, that makes it look quite strong to the upside. A last hurrah, as it were. Don't often talk about Fibonacci's, but you could put fibs on this just to join the crowd of fib traders. 23.6, 38.2, which would coincide with the hourly 8 EMA. Still that gap there, that's why I draw these levels. We've got lovely gaps all over the place. Would never use the fibs in terms of overriding my levels, but that's a nice confluence of about 5 different trading methods. Fibonacci's, horizontal lines, moving average, goes on and on. 50 level down here, that's always good for a potential bounce. 61.8, another nice clear gap, none of my support and resistance levels here. What came first, the support and resistance, supply and demand, or the Fibonacci's? It's you can never stop learning in this business. Oh, and the pivots are in there as well. Remember, we've got pivots and they're not interacting with any of our, there's a pivot there, the R1, don't know where the R2's hiding, that's the R2 in there. So, you know, these gaps are just absolutely clean as a whistle. And that's how I do my trades, guys. Don't use the fibs, never really, but I just thought I'd put them on there to see what it looked like, because it was such a lovely long swing up. But that's interesting. Those gaps are interesting, that they coincide with the pivots and the fibs. That's just amazing. Anyway, I find it interesting anyway. Get rid of that. So that's my potential plan. Up if it goes up, down if it goes down, and there's my gaps to trade. Thanks for watching. Have a good evening.